Eric Muathe with Muathe.com. Let's use the current SLX chart to understand uptrends and downtrends. We can see here a nice uptrend from mid last year to about early this year as far as the steel sector was concerned. Now, one characteristic of such a trend is uniform activity. Support at the 50 level tends to be evident. Multiple bounces here on the RSI 50 level. Here it held support for the lows there, bounced with uniform activity for this low here. Now you'll see that something has changed recently in terms of how the stock is responding, or the ETF is responding to the RSI 50 level. You can see uniform activity above 50 back below it for the highs there. Recently we've hit that level twice. Looks like double rejection at the RSI 50 level for these highs, suggesting that now more than likely this trend in the steel sector continues to be pointing and favoring the downside. Also, we can use the weekly chart to gauge any push or momentum increase to the downside. If it cracks below the recent weekly closing low, which is at 36.14, any break to fresh weekly closing lows might suggest that the stock is just about to start attacking the downside with some increase in velocity. So as long as the stock is being rejected at the RSI 50 level, this favors continued pressure to the downside. There's also one other observation, which is the recent break on the trend, and we can see that it broke down here. This RSI break corresponds with the movement right there, and so if you draw a line from there, which happens to be just above the 50 level, somewhere there, you can see that the stock's been finding it difficult to move above this level here. So rejection here, and we came close here, were rejected. So as long as we have uniform activity rejection on this red line, and also on the 50 level on the daily RSI, here we are seeing more visual evidence that the trend here continues to be pressed to the downside. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings.